We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses.
While wages have seen record growth this year, inflation has increased at double that rate. To try to get the economy under control, the Fed has raised interest rates 5 times, and more hikes are expected this year. The question now for millions of Americans is, when will the pain end? To help answer that question, USA Today economy reporter Charisse Jones spoke with Georgetown professor Eissa.
So thank you, Professor Eissa, for being with us in person in the studio. It's so great to meet you. And I'm curious about your personal feelings on what's happening right now with the economy, and if there's any reason to be optimistic, because the headlines are very negative and people are really scared.
My main concern right now is probably the main concern that everybody else has, which is inflation. I think the delay that the Fed had in dealing with inflation, in addressing inflation, has actually made things worse than they need to be. And even though the Fed started in March to tamp down inflation, I would have to say I'm not very optimistic about our ability to get out of this situation without a recession.
I think it's at the supermarket where folks really feel the hurt, when they're shopping and trying to fill their cart. I mean, why does the price of milk, for example, just seem so stubbornly high? And is there a connection to what's happening in Ukraine or other parts of the world?
It can seem confusing, right, to link things that are happening on the other side of the world to what you buy in the grocery store. The impact of the war in particular is twofold. One is it creates a lot of uncertainty. That uncertainty we are seeing in the price of fuel, right, in gasoline prices. It's also affected the supply of inputs. Fertilizer, for example, has been restricted because of the war, right? That affects the cost to farmers, and that ultimately feeds into what we see in the supermarket. So the increase in food prices has been most severe for basic goods. The price of chicken has been going up at something like 16% year on year. Bread, cereals, milk have also been increasing at very high rates. Because of that, the impact is going to be most severe on people at the bottom. And that's the concerning part of inflation.
What happens if, the war in Ukraine continues for another year?
Wars have a large impact immediately once they occur. But over time, economies adjust. Right? So I don't expect, if the war continues for another year or two, that the effect on prices would be continuous to the degree that we're seeing now. But I don't think we should be expecting to go back to the prices that we had before the war or before the pandemic.
The Fed finally started to raise the interest rates, and yet inflation still stays so high. Can you break that down a little bit about why we're not seeing more of a drop as a result of their actions?
Just in general, inflation isn't something that changes overnight, right? So you expect there to be some lag. There are certain things that are outside of the Fed's control. Right? They cannot do anything about external events. They can't do anything about the supply chain issues. I think the issue is how much of the inflation we have today is driven by those factors, and how much is driven by the belief that inflation is going to be high, and the extent to which that gets embedded into how firms price their goods, how workers negotiate for wages. And it's increasingly looking like inflation is becoming embedded.
Let's talk for a second about another area that takes a lot of our income, and that's housing, right? So housing prices went through the roof. And then at the same time, we saw the highest average rent, above $2,000 a month. Why is it so expensive to buy something and to rent something?
So the housing market initially was shocked by the pandemic, when people suddenly wanted to move out and buy bigger homes. So that increased sharply the demand for homes. The low interest rate environment also supported the higher prices. When prices skyrocketed, a lot of people, as you say, couldn't afford homes. They ended up going to the rental market. And so even though initially, especially in inner cities, rents fell dramatically in 2020 with the pandemic, over time, the demand for rental housing increased. And so we're seeing the effects of that now. I think overall also there's a long-term issue, which is we just haven't been building enough homes or rental properties to meet the demand. That's going to continue unless we deal with it.
You talked about how you think that recession might be unavoidable. How bad do you think it will be?
I don't think we can say up front whether it's short term, but it will not be quick, I believe. I don't think it's something that will turn around. It looks like the Fed is going to have to do a lot more to convince the market that it's going to tackle inflation. The thing we worry about most with recessions is unemployment. And we just haven't seen any decline in the labor market that's significant, even as the economy contracted the first 2 quarters of this year. So what gives? I wish I could answer that question.
Right. And how might we see this play out in terms of people that are having to cut back?
So I think we should expect to see everything from people going without, and we are seeing some signs of an increase in food insecurity. I expect to see kind of an increase in debt over time. We have already seen some of the large employers announce job cuts. The market has to adjust, and I believe that that's where we're going to end up, that the power that workers have had over the last 2 years are starting to wane.
There's some people that are saying that they feel that the Fed is pushing us towards recession. What is your take on that?
So unfortunately, when you have inflation, the way that you reduce it is you try to slow the economy down. And so that could be perceived and seen as pushing us towards a recession. The question, and I think what the Fed has been trying to do, is how much do you slow the economy down to try to kind of get prices under control? And the experience that we've had in the US is we've rarely gotten out of high inflation periods without going into a recession. You go back to the 1980s, inflation at that point had reached somewhere around 14, 15%, so much higher than where we are today. But the Federal Reserve ended up pushing the economy in that case into a very deep recession, in part because they didn't take action early enough. And as a result, we had a deeper recession than we needed to. The concern is that's what's going to happen now.
Do you expect to see double-digit interest rates?
I don't expect to see double-digit interest rates, but I think we'll be very close. The numbers that we're seeing in the progression of inflation suggest we have a ways to go before things start to kind of moderate.
Is there any way for us to steer clear of a recession?
Given where we are today, the only thing that I think would work is for the Fed to really just keep at its policy of price stability.
Are you optimistic at all, or what's your personal outlook?
I'm optimistic that the Fed will get back to the 2% inflation eventually. Whether that takes a year and a half, 2 years, I think is still open. I'm not optimistic about how we get there.
I want to thank you, Professor, for being here in the studio and all of your insight.
Thank you for having me.